The Morgan Report with David Morgan.
David Morgan with themorganreport.com for the weekly perspective for the week ending 7 May 2021. Cinco de Mayo +2. Well, let me start off the stock market and state that technology has been a laggard for the last month. And the three strongest sectors has actually been energy, materials, and financials. So there is rotation going on in the stock market. Of course, healthcare is up there as well. And just to let people know that things do change in the stock market, but it's looking strong. And the NASDAQ is bouncing off support, looking good. Whether or not it will hit another new high or not remains to be determined. The jobs report, the April released today, this morning on the 7th, showed only 266,000 new jobs were created, which was below expectations. Some were expecting 1 million, so that was disappointing. And of course, the 10-year U.S. Treasury yield went down rather significantly on that news. So let's move into the metals. I want to point out a couple things that we increase the size of our links to our YouTube channel, Twitter feed, LinkedIn, and Facebook presence. So those are easier to find than up here where they still remain. And let me get into a little bit about the silver market. Before I do, let me just state that gold closed well over 1,800 today. It's at a 12-week high. Silver is up about 6% for the week. Commitment of traders is still slightly favorable to going higher. And let me dig a little deeper into the silver market. All right, let me jump right into the silverback Rampage impact on COMEX warehouses. This is from the WSS, the Wall Street Silver Group. So as you can see at the start, January 27th, the registered category was 149.5 million. Going into the end of May here, 116.9 million. So the change in 71 business days was 32 million, or more than 20%. Rather impressive. The eligible category, 248 million, 243 million, maybe 5 or 6 million, so maybe 2%. So the total between the two is here. Starting the end of January, 397.9, you might say 398 million, and now at a roughly rounding up 360 million. This graphic here, COMEX registered inventory, the physical SLV, the Sprott PSLV, ounces in the trust over time. And what you can see is obviously this red line, I'll go over it somewhat, and you can see it's really shooting up here. And that's been just from February, where a lot of the WSS crowd started talking about the advantage of having PSLV over the SLV. And then here you can see the COMEX registered stocks, as I just read you at the top up here. But graphically, you can see it's gone from, I'll just call it 130 million, coming up to about 150 million, leveling off. And it is being depleted, at least as we speak. Interesting. Just want to get that out with a lot more to come. So the next thing I want to go over is on silverseek.com. I think you can get it other places. It's the CFTC Response that came on, or at least posted on SilverSeek on the 6th of May yesterday. And it's addressed, of course, to Ted Butler. Ted, as he's done for many years, has pulsed the CFTC on the whole silver situation, I'll say. What I want to do is go over this, and I want to do my best to interpret it to my best ability. And this is not a favoritism. This is nothing more than my interpretation. Hope you don't choose sides. I just hope you take it into consideration. And I'm not going to read the whole thing. I'm basically going to look at what the response is and make a few comments. Highly recommend anyone interested in this go to SilverSeek or wherever, find the letter to the CFTC and the response, and then Butler's thoughts after that. But for right now, let me just look at what this says. And this is from Ann Wright. Thank you for your letter of the 5th and a potential fraud and manipulation in the silver markets. Please know your information has been shared with appropriate staff at the Commission for consideration. All right, good enough so far. The Commission's Division of Market Oversight, DMO, monitors derivatives markets. They monitor the derivatives markets. Do they monitor the silver market? Do they? Well, she says that they monitor the derivatives market, which is their market. They make the rules, they make the contracts, they up the margins, they decrease the margins, they set the limits in the derivatives market. The derivatives market is a derivative of the silver market. So let me go on. It just basically talks about how the Commodities Exchange Act may take enforcement actions against individuals or companies as needed, including for fraud and manipulation. Well, fraud and manipulation of the derivatives market, not fraud and manipulation of the silver market. That's the way I read it. These two divisions work hand in hand to continually evaluate and review precious metals market as part of the agency's mission to identify situations which may pose a threat to market integrity. What market integrity? The derivatives market integrity, the futures market, the options on futures, that market. That's what they want to have high integrity in, which of course you can make up your own mind on that. Plenty's been written and verified. Where appropriate, the CFTC's Division of Enforcement may pursue, with the approval of a majority of the Commission, enforcement actions against individuals and companies whose conduct violates the Commodities Exchange Act or the regulations pursuant to the statutory authority. In other words, if you violate anything in the futures market or the options market, then they'll go after it. So, as we know, they've done this thing on spoofing. We know that there's been the RICO Act put up against J.P. Morgan. And we know that things have taken place. But still, this is basically, if you read it the way I read it, it's talking about, we're really careful to make sure our derivatives market's on the up and up. They're really kind of just sloughing off the silver market in my interpretation. So please understand, any further inquiry or regulation conducted by the Commission as a result of the information you've provided is confidential. We cannot share information regarding non-public enforcement matters. Thank you again for sharing these concerns. Sincerely, Ann Wright. Of course, you can go on and read this on SilverSeek. Maybe Ted has it on his website. I'm not sure. Ed Steer probably writes something about it. I'm sure it's out there, at least here and probably several other places. You can read his reaction. He's pretty well thought out. But I just want to give you my 2 cents on it because, of course, they're going to make sure that their market, the derivatives market's not going to have any funny business. After all, that's what sets the price. A derivative sets the price. Silver doesn't set the price. So now that I've calmed down somewhat, let's look at something very interesting here. This is the See It market. Gold price pattern, cup and handle to the moon. This shows, as I've talked about many times, a cup here, handle down here, breakout point here. And once you get above that cup and handle, if you don't know, you've not heard me before, is the most powerful formation in anything, technically, meaning a stock or a commodity. Or if you could plot the real estate market. There's the cup, shows it, handle's good. Handle coming down to the right's what you want. Then the pivot point of the breakout is where it gets to the top of the cup and starts going up, which is, as I showed you, this red line, and then away you go. So this article talks about that, and I think it does a pretty good job. It's very short. You can take a look. Next up is an article from Mike Gleason, Money Metals Exchange. I've known Steph and his brother and Mike for some time. I've been on their show over the years, several times actually. But he writes a very good article on gold and silver surging toward a long-awaited breakout. As I said at the beginning, gold is at a 12-week high. Silver is 6% higher this week. That's basically what the article says. And then he goes on to talk about Secretary of Treasury Janet Yellen. Says not to worry because the Fed has everything under control. Financial news anchor number 1. Well, now that the Treasury Secretary says she does not anticipate that inflation will be a problem in the U.S. economy, Treasury Secretary Yellen also aside from some transitory, that's Fed word for increased inflation in the coming months, I don't think there's going to be an inflationary problem. The Fed has the tools to address them. Well, they do. They can raise interest rates, but they can't raise interest rates like they did under Volcker, which is the last time this thing got away from them. So I won't read you the whole article. I think you can come down here and read the final part that Mike writes about. In recent days, we've seen the signs of such a rotation. Some of the hot stock market sectors, as I talked about at the beginning of this, here, including biotech, internet, and innovation plays have sold off. Meanwhile, inflation plays, including energy and metals, are showing relative strength. Most of our members are pretty happy. I think we've got a long ways to go over the next few years, and I still think by the end of this year, we'll see probably $40 silver and who knows what gold, but we don't want to get too far ahead of ourselves. But I think that's fairly conservative based on everything that's happening in the economy. The Monument Current says the U.S. government debt to GDP ratio worse than Greece's before the 2008 crisis. You can see the political class talking about everything is fine. I just read off a little bit of Janet Yellen. How much debt is bearable? The announcement came months after the Congressional Budget Office released a report that projections of a deficit of $2.3 trillion in 2021. Well, we're beyond that already. Biden's plan will certainly worsen the deficit, although the plan contains several tax increases to fund its programs. Taxes will likely be well below government spending. Yes, indeed. So let's MMT, modern money theory to the moon. Ignore the story. In a popular 2016 article, author Richard Ellsberg explored how the central planners of ancient Rome destroyed the economy. Much of what he describes, debt, massive spending, inflation, and destruction through price controls, sounds oddly familiar to the modern ears, and Ebling naturally explores the ancient puzzle, why did Rome fall? For centuries, any history buff knows, thinkers from Edward Gibbons to Peter Heather have asked the question. The answers vary. Some blame the barbarians, others blame immigration. Some claim it had to do with Christianity, while others pointed to illness and weakening of the Roman legions. All of these theories are interesting and worth analyzing, but I have found no better explanation than offered by economist Ludwig von Mises, who concluded Rome's decline was the result of its rejection of individualism and a free market. Stop there. I think it's a good place to end. Pardon the rant or don't pardon the rant. It's just part of my personality. The CFTC is not your friend. Another bureaucracy. So I'll be back with you next week, and I will be updating our paid members on an as-required basis. Looks like things have turned. Looks like we're going to get some more momentum into the metals. And looks like inflation is coming on where people are recognizing it. And it's going to be interesting to see what happens over the next weeks and months as we further ourselves down the road, having gone through the guardrails and flying through air, trying to tune a channel in that sounds better while we're heading toward the bottom of the canyon. That's my metaphor for the fact that I think we've passed the kicking the can down the road. We've ended the road. It's been kicked off the cliff. And now all that remains is to see how hard the landing is going to be. With that happy news, I'll be back with you next week. Stay healthy and be happy. David Morgan, themorganreport.com.